You've seen the ads. Earn $25 an hour with a new side hustle in Canada. In today's economy, with costs rising everywhere, that sounds like a fantastic way to get ahead, right? But what if I told you there's a very high chance your real take-home pay is actually less than $12 an hour? That advertised rate is a mirage. Once you factor in CRA mileage rates, fuel, insurance, depreciation, and the brutal reality of how taxes work, that number collapses. Today, we're going to break it all down and calculate the real number, the one that truly matters for your financial future. By the end of this video, you'll know for sure if your side hustle is building your wealth or if it's quietly draining it. In Canada, the solution to rising costs always seems to be the same. Just make more money. It's a story of ambition, we tell ourselves. But let's be real, housing is structurally expensive, with rents in major cities going up and up. Groceries have stabilized, but they're still permanently higher than they were just a few years ago. And interest rates, even if they're not climbing anymore, are still squeezing the budgets many of us built in a pre-2020 world. The cultural answer to all this pressure? Get a side hustle. But here's a warning. Moving money quickly through your hands isn't the same as building wealth. It feels like progress, but unless that money sticks around and grows, it's just motion, not forward momentum. So let's get into the nitty-gritty. The CRA mileage rate is about 70 cents per kilometer for the first 5,000 kilometers you drive for business. Now, this isn't just for gas. It's meant to cover every single vehicle-related expense. If you drive, say, 1,200 kilometers in a month for your gig, that's an $840 deductible cost. But this isn't profit.
Tax.
It's a tax deduction against an expense you actually paid for. So if your gross income from the gig is $2,000 for the month, that number is already misleading. The deduction lowers your taxable income, giving you a bit of a tax break. But it doesn't magically put the cash you spent on fuel. It's maintenance, and your car's slow decay back into your bank account. The illusion starts right here. Now for the most critical piece of the puzzle, tax stacking. Let's say you have a main job earning $90,000 a year in Ontario. Your marginal tax rate is already around 29 to 31%. Your side hustle income doesn't get its own tax-free bucket. It gets stacked right on top of your primary salary. It's the last dollar in, which means it's the highest dollar taxed. If your side hustle brings in an extra $10,000 a year after that marginal tax is applied. And then there's depreciation. This is the silent killer of your car's value. The cost you don't feel until it's way too late. Driving an extra 15,000 kilometers a year for a side hustle significantly reduces what your vehicle is worth. This isn't a monthly bill, you see. It's a cost that's extracted all at once. The moment you try to sell or trade in your car, you don't feel it week to week. You feel it once, and it's a permanent loss. It's like a financial time bomb quietly ticking away in your driveway. So let's finally calculate that true hourly rate. Say you work 15 hours a week for 50 weeks a year. That's 750 hours of your life. Your net retained income, after all the taxes and real vehicle costs are paid, is approximately $7,000. Now, let's divide that $7,000 by the 750 hours you invested. That comes out to just $9.33 per hour. That is the real number. It's not the one in the advertisement. Now, let's compare that to an alternative. What if you invested those same 750 hours into your professional development? Imagine getting a certification, learning a new technical skill, or mastering negotiation to get a promotion at your main job. A $12,000 raise from your career isn't a one-time thing. It compounds every single year. It increases your baseline for all future earnings. Gig income, on the other hand, resets to zero every week. Compounding is what truly changes your financial future. Hourly labor, especially at this low real rate, just keeps you in survival mode. The difference is structural. This isn't to say all side hustles are bad. They can be incredibly powerful, but only when they are strategic. A strategic side hustle builds equity in a business you actually own. It increases your skills, making you more valuable in your primary career. It creates ownership of an asset. Ultimately, a good side hustle should reduce your dependency on a single paycheck. The activity you're doing compounds in skills, assets, or equity. It's strategic. If it just fills your evenings with low-return labor, it's just temporary income. You have to know the difference. In Canada, with our high cost of living, Any extra income you make needs to have a clear direction. That direction should point straight towards building assets. Prioritize your TFSA for that amazing tax-free growth. An RRSP contribution could also be a smart move, depending on your tax bracket. The goal is to put your capital into things that can grow without you trading more of your time, things like stocks, real estate, or your own scalable business. Chasing income without a plan just leads to exhaustion. But directing your capital with a clear structure is what leads to freedom. So now, I want you to go and calculate your real number. Thank you so much for watching. We hope you found this information valuable. If you did, please consider liking this video and subscribing for more content that helps you build a stronger financial future. We'll see you in the next one.